What's good, people? It's your boy TBT, aka the Brainless Trader, and we back. Let's go. We're here with another market review video. What we want to do today is talk directly to the people. I'm just playing. We are gonna just kind of give the weekly check-in. I haven't really even started my trading campaign for the year. I have been entering those little baby lot sizes so I can stay in the game, but I am live working on something special. So when it's complete, I'll let you know the results. But God willing, I'll be able to complete it and complete it with exactly what I'm looking for to start 2024 in a big way for me. So the one thing that we're looking at right now is just monitoring the DXY, having seen that there are a few things that we'd like to pay attention to. A little bit of a volume imbalance here that I believe we may have already tabulated, yes. And then overall there's a larger breaker on the weekly or something like that that's here, but I may have to get rid of that just to see what's really going on. So I'm just going to give a brief overview. This is my YouTube overview, my Telegram. I'm going to begin to post the actual overviews that I give to my I do myself that are a little bit more in depth, and that's what I promised to Telegram. So I have a little bit of a free, not a little bit, it is free completely, Telegram page that anyone can follow and whatnot, and I'm just planning on putting after the overview, like what I go through here, actually going through more in the Telegram, right? This is going to be 20 minutes or less YouTube overview. So with that said, in general, last year, over the beginning of, beginning of 2023, we saw some thoughts about going lower, but overall, we just didn't really get any established direction. I caught plenty of opportunities as price was moving up this way and then also down here. As it was September that I started my challenge, so halfway through September I was able to capitalize on a couple of these moves. And then as price moved down here in the DXY, I think is where I kind of started to have a little bit of trouble myself finding my footing on certain trades. And I think that was a result of me having a pause in most of October. I didn't really trade much. You'll see a video come out from me talking through each of the trades that I took. I don't show them actually on the chart because it's kind of hard to actually go back and find the specific trades, but I show my challenge account and the trades that were taken, the profit made, and also the losses, and just talk through my thought process with each of the trades. So what I would like to be able to do is kind of give a deeper overview of the actual trades in the future, but at the time I wasn't really recording anything, so that's why there's no review, just me talking through it. But I'm thinking as we've gone through essentially rebalancing this fair value gap, right, or we've redelivered it. Rebalancing would be trading back through it this way. It's interesting that we've already redelivered it, this one here. And so the next step you would think would be to trade through it, retest on some level in between here in this fair value gap, and then continue to move downward, maybe to this ultimate target for the first half of 2024, if we were really to get that much. I mean, we'd be blessed to get this much compared to what last year gave us during this time frame. I mean, literally January, if you just look at the actual space between this, so January started here, actually here, and then got this high, went this low. So we just talk about this range here from January to what's this, July, literally a range of you might call this 600 instead of 6,000 positions in the market, but regardless, you're talking about from 105 to 199. To 99. So not really that far compared to, a move January to, it's very similar. The previous year, January to July, not much. That's interesting. Pay attention to that. But then after July, you see it cascading in one direction. Boom. But here, after July, you don't really get that. You get almost in one direction, and then you come right back to the same exact point. So in my brain, just looking at the entirety of 2023, we did not move out of this little space here, guys. So there's got to be something on the horizon. ICT's been talking about a potential Black Swan event. Some random lady talked about a potential Black Swan event. We've already had the Israel wars. We've already had the Ukraine war. Everything is ongoing still. But there is a possibility that there could be something bigger on the horizon, which would make the markets jump. I'm not looking for any wars. I would love to have a peaceful time, but nothing peaceful moves the market, as we know. So you have to anticipate these things. You have to anticipate what may happen, what could happen, what should happen, and what will happen. And then you see it develop in the market, and you'll be able to say, okay, what's my move from that, right? So for now, if we're to go a little bit deeper into the DXY, we've kind of just had a run on liquidity earlier or later on in 2023, and this is kind of where I started making my moves towards the second half of September into October. But then we had a market structure shift, and that market structure shift lended to, and if you want to say it, you can call it low high, high low, higher high. This could be your breaker. If you were looking at it this way, this would be your lowest down close candle, even though it's not a down close candle. But if you were to go to the 4 hour, and you could probably find a down close candle with respect to that area, we call it these three. And then if you were to go back, you would probably have to, maybe those three. But if you were to go back and look, where are we? If you were to go back, let's see what I had as my annotations. Oh yeah, I did have that as my lowest down close, but the only issue with it is that we kind of traded past it. We did not trade past this fair value gap though. If we're to zoom in here, this gap was not eclipsed. And ICT's talked a little bit about how gaps within, the kind of the opposite trading side, you could call it an IFVG is what he's kind of termed it. I mean, when he originally taught it, he just called them FVGs, right? And you can use them either way, bullish or bearish. They're interchangeable. Regardless, price does not close above the high of this fair value gap, which eventually becomes an inverse fair value gap, and he uses it. So I had one of my subscribers, one of my guys, asked me about if I use IFVGs, and my response was, I use FVGs, IFVGs, same thing. You can interchangeably use the terms because an FVG has the properties. At least this is what I was taught in the mentorship by ICT. If he corrects me on the video, then it's fine. I can use IFVG if he would like. But my understanding originally was that the FVG could be used interchangeably. It could be a bearish one, it could become a bullish one, it could be a bullish, it could become a bearish one, based off of how price is reacting to it. It's an area that's volatile that we can expect movement in the market. So, however you want to call it, price didn't close above it. And then you see an impending market structure shift, then retesting it back up into that breaker, even though it's not on the down close candle. I just used this because it's the lowest candle. I'm not making things up. I mean, if you go on to the 4 hour, then you would probably see it align with a few down close candles, which is what I termed. Yeah, so it's aligned with these 4 consecutive down close candles, right? It's just on the higher time frame, it looks different because it's a higher time frame. So using that, you can tell there was a market structure shift, and then price retested back into that breaker zone area. Also respected this FVG, although it traded a little bit past it, still continued downward. And so with that said, we've got open fair value gaps. When you leave open fair value gaps, you know you're going to continue in that same direction. Price does not trade back up into it, right? And so now we've kind of got this cascading area where we've traded into this fair value gap here. Well, this fair value gap is from a while ago, it looks like. Let's zoom out. Okay, yeah, so we've got a fair value gap from way back when, 2022. that I had on my chart, just looking at in terms of targets for the downside, right? The reason why I highlighted this one is because this area has been kind of volatile. Price has gone down here a couple times and moved itself back in the opposite direction bullishly, and then still came back down below in 2023, then retested off of it and continued bullish. And so this area is an area that it's respected multiple times and truly has yet to be rebalanced, if you're honest, because this is a redelivery. When price comes back into it and then uses it and goes the same direction as the original intended FVG, that's a redelivery. But rebalance would have been if this traded back underneath here, retested off of this and went down. It's completely filled both directions of the fair value gap's purpose, and so that would have been rebalanced, but it's not. It's just been redelivered. I mean, you could say it's been rebalanced because it's been traded both ways, I guess you could say, but to me, a true rebalance, if I'm looking to use it as like a trade entry point, you would want this to not go that way. You would want it to respect this and go below, right? So when FVG is rebalanced, you know that price is going to use it to go the opposite direction in a typical market structure. And so that is what I'm potentially anticipating here. Price is kind of struggling to get above this OB. There's a volume imbalance here that price is not closed above. We can zoom in a little bit. And then, you've kind of got the impending FVG that is remaining open because price is not closed this fair value gap either, but you've got the volume imbalance that was here. So you've got a lot of continued opportunity for price to continue to go down, and you see how it's reacting already. So what does that mean for us in other pairs? If we're bearish in the DXY, we are bullish in other pairs. So you're looking for that type of market structure to align, the market structure to be symmetrical in that it should be respecting the bullish outlook. Only problem with that is that we've just eclipsed recent highs. Not to say that this can not continue to move up to this ultimate target up here, which is kind of equivalent to what we had in the DXY here, right? And I bet you it's a July high. Let's see. There you go, same exact day. So what do we understand about what's going on in this chart that is correlated with the DXY? Now, we'll go back to the DXY. Is there a sort of breaker type of structure forming? Maybe, potentially, but it's not exactly clear, because the fact that we are still having fair value gaps open to the bearish side and price is kind of respecting those, not even closing above even the recent fair value gaps, let alone this one, let alone the volume imbalances that we highlighted. It's like, you're still bullish. You're going to remain bullish. You're still bearish. You probably remain bearish in the DXY until proven otherwise. Maybe until we trade above this high or close out this fair value gap. Otherwise, you should be thinking bearish, most likely. So if I'm thinking bearish, then I'm most likely going to think similarly here, bullish, which is opposite of the bearish outlook. Now we got tons of, fair value gaps. This will probably just take off my chart here. Got tons of fair value gaps and opportunities, price having eclipsed buy side liquidity and whatnot. But the thing that I looked at here was similarly where we had that fair value gap that was within the breaker. We have another fair value gap within the breaker here that was respected and not traded past this fair value gap here. So when you're looking at a market structure shift, this is obviously, you got into this fair value gap, you probably eclipsed some level of liquidity. This level of liquidity, got into this fair value gap, which is I think on a 4-hour basis. I'm not gonna actually go into it because this is just high level. But this fair value gap, right? If we're just looking at this gap here, I don't have it highlighted, but just look, fair value gap, it was never closed past. So same thing as we had in the DXY here, was never closed past. So how do we use that? We have to see how price reacts to it. There's another fair value gap here towards the top of this high that, as price traded up above it, traded back down, it closed a little bit past it, but still went the other way. You could use that. That would be my idea of no, it's not completely rebalanced. This is a bullish one, so this would technically be redelivery. But anyways, there is a fair value gap here, as well as the overall breaker, which you can just understand that if you don't trade a close past the midpoint of the breaker, which is approximately right there, maybe a little bit higher, and you could have been looking for trades here, knowing that this is a fair value gap as well. You kind of have some structure that supports a move to the buy side to try to eclipse some of this liquidity, which it has done. Now I got chopped up in here too, because I was trying to make sure that I was on the right side, and after this liquidity was ran out up here, I think I got chopped up trying to take some sells, not really trusting my analysis, which I just broke down perfectly. So that's kind of some of the working points for me this year, is just really being confident and getting in there and doing exactly what I know I should do based off of exactly what I'm saying to you. And a lot of that is just trader confidence, back testing, time in the market. If you've spent time in the market, then you can be a little bit more confident in your back testing and your abilities live trading. So all it is just a process, a learning process. It may take me a little bit longer than it takes you. It may take you a little bit longer than it takes me. It is what it is, but all of it is about our personal journeys. And that's what I'm on. I'm on my personal journey, and I'm still excited. I'm out here talking to y'all. It's year 2 of me being publicly out here, but year 3 of me actually being in ICT's mentorship. Matter of fact, I'm going on year 3. So I've had his mentorship since 2021. So 21, 22, 23. So yeah, I've done 3 years of mentorship with ICT. And I've seen around the 2.5 to 3 year mark a lot of his students who are avid studiers and doing what they should be doing by their journals and all this stuff. I've been doing what I need to be doing. I've been doing what I need to be doing. You feel me? I have multiple levels of different types of notes. I have multiple different actual things that I've shown you guys over and over and over again. My model, things that I'm focused on, typically, you know what I'm saying? Like I got what I'm looking for. I know exactly who I am as a trader. Now it's just time to be him, be me in the market. You feel me? So, yeah. With that said, we're looking to see if our bullish outlook will remain, and I think that it is. If you're looking structurally, just look at the way that we're respecting just look basically at the OBs, right? This is an OB. Order block, respected. Bodies respected. This is an order block. The bodies are respecting it. You understand what I'm saying? So it's just about being a little bit more simplistic about my analysis, using the order blocks, using the fair value gaps, same as my guy, my boss ICT does. Keeping the outlook simplistic and understanding that if your bias is bullish based off of the DXY, then you can be bullish, right? So that's my outlook for GBP in general, and I'm also going to be looking more in depth at GA. If you look at GA really quickly, I got about a minute and a half. We are looking bearish, to be honest. Right now, we've had a kind of a market structure shift here: high, low, higher, high, breaker, low. This is like a 4-hour breaker, or no, it's a daily breaker. And I just got the wick highlighted. If we're going to really remain bearish, I'd like that wick area to be respected, but you also have some structure here that we could potentially hold our efforts to continue back lower. So we'll see how price holds up. If there are some FVGs that are opened up and remain open, like this one, and if we can get that continued movement to the downside after we maybe run some liquidity or come into a fair value gap or hit an OB, then we'll see what we have in GA. I'm kind of leaving GJ to the GJ experts. I'm not really a GJ expert. I thought that I wanted to be, but I'm back on my GA grind. GA, GU have been very good to me, so that is it. So as you see, 26 seconds left on this little trading view recording. That's all that I'm gonna give y'all for YouTube purposes. Just checking in with y'all, let you know I'm here, I'm with it, and we're just gonna continue to incrementally grow here on YouTube, if you feel me. So may God bless y'all. May y'all have a beautiful, beautiful trading week, trading year, and I'll see y'all in the next one.